Thanks, Matthias. Thanks, Emmanuel. I'm Piebe Teeboom, Secretary General for FIA EPTA. And indeed, I will come back to some of the same abbreviations that Matthias also just mentioned. We have been very much involved with this proposal and its creation earlier, all the way back to, I think, 2014. We have very much welcomed the proposal and are very happy that the co-legislators and the Commission have taken this up. And indeed, as Matthias said, details are important. So with our strong support for this proposal also come some ideas and suggestions for limited amendments that we believe will really make the proposal stronger, but also will help ensure that it actually achieves its CMU-oriented objectives of diversifying and strengthening the European capital markets. Hence, the theme of my presentation being strengthening European capital markets through proportionality. So I'd like to say a little bit about our members, who we are, but also very much what we bring to European markets and what the benefits are more generally to European citizens and companies. So EPTA is the industry group for 28 independent market-making firms that are providing liquidity to European exchanges. Collectively, we're responsible for up to 45% of the liquidity on European markets, and as a result, we believe that we really bring a lot of added value to end investors by making markets more efficient, more cheaper to trade in, but also more diverse and safer, and I'll come back to that shortly. So, as the voice of our members, we, of course, try to ensure that our voice is heard, but also we try to ensure that our members can continue to contribute to the quality of European markets. And we really believe that the type of professional intermediaries that we represent are a key part of the modern financial services architecture that we have in Europe currently and that we should be proud of. So just a bit more about who we are, what we contribute, and how that benefits our society. What I want to emphasize is really the highly disciplined nature of how our members run their business. They do that using their own money. It's not outsiders, investors' money. They don't manage assets for others. They put their own money, their own capital on the line to provide liquidity in the markets. And that drives their whole culture. It drives how they are working with the latest technologies to be as efficient and forward-looking as possible. It drives the type of markets that they provide liquidity to, which are exchange-traded. It's a strong focus on centrally cleared markets, meaning that there is a very robust risk management in place. And obviously, they're all competitors of each other, and they're competing very hard. And what I really want to stress is the diversity of this group. So they all use their own money, and they all are very focused on risk management, and they are market makers. But the type of products, the type of strategies, the specific markets that they are active in is really very diverse. And that's also where the competition comes in, because they see opportunities in a certain part of the market and they enter into it. And going back to what Matthias said, the prudentially, that is of course a very important factor, because if one falls over, another competitor will come in. So the contributions, as I said, are really around providing liquidity, but also facilitating immediate risk transfer in the exchange-traded markets. That helps improve price formation, reduces volatility when markets are stressed. And by the way they've set up, we've been also very involved in further innovation in the markets. We've been strong supporters of the MiFID framework, MiFID 1, now MiFID 2. And we really believe that helps deliver value to not just the market system, but in the end investor and the companies and the citizens that are relying on the markets to achieve their goals. And of course that is what we want to strengthen in the CMU, to make that a bigger part in Europe as well. And hence we really believe that it is important that the proportionality goals that are set forth in the proposal in terms of objectives are really translated into practice. So just to take you along in how we generally look at European regulation, we're really focused on three main themes. Does new regulation ensure that markets will be more stable and more orderly? Will it help ensure that markets are efficient and also that they are fair? Of course, stability and orderliness is really the basis, because without that there is not a market where we would be comfortable committing our own money. But it also really needs to work for the end investor. And that is obviously key. And then in order to be safe and efficient, it also needs to be diverse. And that's why it's so important, we believe, to make sure that there are no undue barriers to entry. Then turning that to the investment firm review, as I said, we really support the overall framework. We support the K-factor approach. And the proportionality and simplification objectives are really ones that we like. But as I said, we believe there are limited amendments needed to actually achieve those objectives. And we believe that is possible, and we also believe that it's possible without giving in on the actual prudential soundness of the regime. And Matthias just mentioned the clearing framework. That is, of course, something that has been ingrained in European markets for decades, and it's proven safe over time. And I'll get into that now. So just starting with classification, because proportionality, as far as we're concerned, is proportionality in scope, and then next proportionality in actual application. So we're very comfortable and happy with the proposal with regard to Class 1. We really believe that the original proposal identified the investment bank community basically as the right group for being in Class 1. We've noted, obviously, the discussion seeking to limit or to broaden the scope of Class 1. We don't think that is the right way forward. With regard to Class 2 versus Class 3, in our case, any firm that trades on own account with even €1 will need to be a Class 2 firm. We believe that our smallest members that are perhaps working with 10 people in terms of employees and have a fairly small operation could rightfully be Class 3 firms. Going back to the clearing margin framework, we believe if you have a fairly small trading operation, and we've expressed that as 15 million or smaller in terms of the clearing margin, you're really a pretty small firm. And that, for us, would be our smallest 4 to 5 firms. Then more importantly, the proportionality in outcomes. So risk to market, we very much welcome those, the fact that 4 methodologies have been identified, but obviously from our experience, we know that the CMG measure is in many cases appropriate. There are other cases where actually another method might be better. So we're really arguing for the either or approach rather than the higher of approach. And then of course the next step would be to make sure that this CMG measure is indeed reflective of how it has been working in practice in the market and has proven to be safe. And we've noted that in the discussions amongst the co-legislators, the CMG is being well discussed, and obviously we hope for a positive, good outcome. Just in terms of diversity, and there's a paper actually in your materials which spells this out in more detail, but going back to the diversity of our members' activities, the different methodologies for calculating capital requirements really lead to very diverse outcomes. And that is really why we believe that allowing those different methodologies to be used is very essential. And this also shows that CMG is is the most stable measure because it really encompasses the way our members provide liquidity to the markets as market makers. But in specific instances, actually another methodology taken from CRR might work very well as well. Then the next one, risk to firm.
Can I ask you for your final point?
Sure. Yes, that's risk to firm. That has been somewhat problematic because there are some pro-cyclical features that affect it. But there too, we believe that with targeted smoothening of the proposal, a good outcome can be achieved. And we've noted that discussion has come up, and we very much support that. So my closing words are really that we support the proposal, but that we also see some room for limited amendments, and we welcome the fact that those are being discussed both in Council and the Parliament.